Hi, I'm Whitney Espich, the CEO of the MIT Alumni Association, and I hope you enjoy this digital production created for alumni and friends like you.
Hi, everybody. Welcome to the MIT Social Entrepreneurship Alumni Group webinar, Conversation about African VC Landscape. I am Sayuri Sharper, President of the Alumni Group. I'm pleased to have as our guest, Roseanne Whaley, CEO of AHL Venture Partners. She is joining us from Nairobi, Kenya. Roseanne brings over a decade of direct experience investing in Africa and building financial institutions. Prior to her CEO role, Roseanne led investments in East and Southern Africa. Before AHL, Roseanne worked for Infraco Africa, where she focused on investment in solar. Before that, she was a second employee at AgDevco, helping to build AvDevco into a leading Pan-Africa agri-investor. This event is a conversation with Roseanne, so we'd like to be very interactive and spend the bulk of the hour on questions and answers. Roseanne will start us off with a 15-minute remark about how the African VC landscape has changed in the last 5 years, where it is now, and where it's going in the next 5 years. While Roseanne is speaking, you can use the Q&A button to type in your questions. We will start going through your questions after the remarks. And let me also introduce you to Vera Schroeder, who is our VP of Programming. She'll be helping us in reviewing questions and posing these questions to Roseanne. For those who don't know us, MIT Social Entrepreneurship Alumni Group is organized under MIT Alumni Association. Our mission is to bring together MIT alum and like-minded people to co-create a better world through social entrepreneurship and impact investing. So we welcome anyone who is supportive of our mission and invite all interested persons to join our community platform. Our URL is on the slide. Please check us out. If you have questions, you can contact me at the email above. Now let me turn it over to Roseanne.
Excellent. Thank you very much, Sayuri, and thanks for that comprehensive introduction. Let me just share my screen. I hope you can all see my screen. Yeah. Oh, I seem to have jumped ahead. Excellent. Fantastic. Well, just before I quickly introduce myself and a little bit about AHL, I just thought I'd kick off with a fact that I'm sure many of you are familiar with. That is, if you take the top 100 countries globally by GDP, and if you take the top 100 companies listed by market together, 9 are companies of the top 100. Why did I start with that? It's maybe an unusual introduction to capital, venture capital in Africa. But the reason why I suppose I started with that is because that growing in globally. And it's something that I feel very passionate about. And it really talks to why I have spent the last decade of my career focused on investing in early stage companies in Africa. I'm really passionate about building up the economy, the backbones of these economies. In addition to that, both my parents are entrepreneurs themselves. So that's kind of also part of my background and what's kind of led me down the path of impact investing in VC in Africa. So my name is Roseanne Whaley. I am the CEO of AHL Venture Partners. As you can see here on the slide, we're an impact investor. We invest exclusively in Africa, you can see here on the right, we invest across 3 thematics. So that's food and agriculture, energy access, and financial inclusion. We invest in a number of different types of assets. So you can see we do direct debt, and I would really define it as kind of venture debt. We do very early stage financing. Ticket sizes of 500K to maybe 5 million in the first round, but then we try and do follow-ons. So we're often unsecured mezzanine debt financing. We do early stage equity financing, and then we're also an LP in 12 funds. So it gives us a really unique perspective because of course we can sit on these LPACs of these other funds, kind of learn from our peers' best practice. Other thing I'd say is that we've been very mindful not to compete with our other GPs. So we've tended to use our fund strategy to cover markets that we wouldn't necessarily directly invest in ourselves. So we've got fund investments, particularly in West Africa and Central Africa, where we're not doing direct equity and debt investments ourselves. And then quickly, in terms of us as an organization, we've been operational since 2007 on the continent. We're entirely based in Nairobi as a team, and that was a very deliberate decision. We used to have, funny enough, our headquarters out of Vancouver. You can imagine the time zone was a little inconvenient doing business in Africa. But actually, maybe this is one of the trends we're beginning to see, but we took the decision that it was really important to localize. And so I'm actually the only expat in the entire AHL team, and we're fully based out of Nairobi. We're a permanent capital vehicle, and we're endowed by one ultra high net worth family. So ultimately, everything that we do, we're trying to create positive social, environmental, and gender impact, but also a financial return. So just quickly about our portfolio, just to paint the scene before I go into some general overviews on the market. You can see from our portfolio construction that we're heavily at the moment invested in equity. And then the balance of our portfolio is predominantly in funds and then a small amount in direct debt. The convertibles is because, as many people do in venture capital, we do a lot of early convertible notes, which likely convert into equity, which is why our convertible note. Interestingly, and I'll touch upon this when I talk to some of the looking forward in the market, but we've actually put a pause on new equity deals, and we're really heavily now focused on more of this venture debt play, because we see that as a really interesting growing market and opportunity on the continent. The other thing I'd say is that if you look on the right, I've just put a couple of images of portfolio companies. We're an interesting organization in that I wouldn't define us as a pure VC. We define ourselves a little bit more as an impact investor. We've tended to invest in 2 types of businesses. So we've invested in the likes of a kind of Twiga Foods that many of you might have heard about, recently raised a $20 million round from Goldman Sachs. Now, I would classify that as quite a VC deal, super ultra high growth of revenues, significantly lottery to kind of transform a market. So we've done those types of deals, but then we've also done deals in what I call your more vanilla bricks and mortar type businesses, where the upside potential is maybe not as great, but I think also your downside is more managed. So we've kind of got quite an interesting and diverse portfolio in terms of the types of deals we do. So I'm going to run through 3 slides quickly in terms of a bit of data on the market in terms of VC in Africa. I've offered to share these slides after the presentation, so if I run through them quickly, don't fear, I will share the data. I should also say this is completely plagiarized, it's not my data, and I would encourage you all to look at the Africa Venture Capital Association. They actually published a report in June of this year, and it's excellent. And this was my kind of starting point for just bringing together this high-level set of insights from VC in Africa. So I think what you can see is the trajectory is clear. There's significant growth in the level of investing that's gone into VC in Africa over the last 6 years. Obviously, we think, we'll see a bit of a drop off and possibly a drop off into 2021. But generally, you can see the trend is very positive. There's been a lot of growth over this period in terms of VC and investing in Africa. The other thing I would note is just that in this report, it talks very interestingly to the fact that now in Africa, many countries are now receiving more foreign direct investment than ODA, which personally I feel is a very positive thing, and very interesting that these economies are shifting from a dependence on ODA and obviously shifting to more types of foreign direct investment. I just wanted to kind of reflect quickly on the question of why Africa, like why are we seeing such significant growth in the investing space on the continent? I mean, I've just jotted down a couple of things. I'll be interested to hear what others think, maybe even Sayuri, who's doing some investing herself. But I think, when we've been having conversations with prospective LPs, when we were raising a fund 2 years ago, I think a lot of the pitch was around this is kind of the last frontier. It's a very untapped market as yet. Lower levels of competition, huge population growth, second highest GDP growth rate in terms of region globally. So lots of kind of positive signals as to why there would be investment opportunities on the continent. There are, of course, significant challenges, and I'm happy to talk to some of those in due course. So then just quickly in terms of where the capital is going, I thought this was quite interesting. It's obviously regional. What you can see blue, that is the actual volume of deals, whereas the orange is the value. So you can see that the largest location for investing is actually multi-regional. And so what that's talking to is, to be honest, jurisdictions like Mauritius or the UK, Delaware, which are the very kind of attractive and tax efficient structures through which to invest into the continent. And the majority of deals we're doing, we see go through these types of jurisdictions and then funnel through into Africa. What I should say is that essentially, if you distill this data down, East Africa is Kenya, and when I say Kenya, I mean Nairobi. Southern Africa is South Africa, split between Joburg and Cape Town. West Africa is Nigeria, primarily Lagos. So at the moment, capital is really into a very specific, narrow set of geographies on the continent. And then just there on the right, you can see in terms of by sector, what I found interesting about this graph is that there is nothing in ag. And I think that that's kind of right. BC is not necessarily, particularly well aligned with a lot of like primary ag investing on the continent. Having said that, I've definitely seen in the last couple of years a big uptick in terms of ag tech. And as AHL, we've done a couple of investments in ag tech type deals. And then moving on, I think that this is pretty obvious. If you look at these charts, this is really about who's getting funded at which stage. So you can see the bulk of transactions, the volume of transactions are really in seed round, Series A, B, and it progressively reduces over time. You can see capital, obviously, it's relatively steady. And a big reason for this, again, is these markets are essentially very small. They're very fragmented. GDPs, the whole GDP of Africa is nearly the same as some global companies like Facebook, Microsoft, etc. So there are not that many large rounds being done D, E, F, and onwards. And I just wanted to include this, and again, I won't spend much time on it, and you can refer back to it. But I thought it was interesting in terms of essentially where the capital is coming from, and you can see that there's a real interesting blend here. So you've got your PE VC funds, you've got corporate venture funds, and I'll just note I actually am seeing a lot of corporate venture firms doing more and more, and actually I'm not sure, Sayuri, if you saw us, but last year we did a whole session around the rise of strategics investing into the continent. And as AHL, we've now done a couple of investments, co-invested with large strategics, looking to get a foothold onto the continent. So that's actually one segment or source of capital that I see significantly growing over time on the continent. But you can see a real mix here. And of course, what it doesn't highlight is that the impact investing aspect of it. And so what I think you always have to bear in mind is like kind of overlaying that you have those investors that are more traditionally kind of commercial first, and then you've got a range right through to the more kind of philanthropic impact first. And again, I think that's one of the nuances of the continent, that you've got this real blending between different types of investors with at times quite differing kind of objectives. So now this is a slide I included because I think it's really interesting, and I'll be honest, I think that this is maybe the elephant in the room when it comes to VC in Africa, impact investing in Africa. You know, it's something that is not necessarily talked about extensively, and that is, you know, the fund economics. Is it a viable kind of asset class to do VC investing on the continent? This graph, which comes out of a report published in December of 2019, produced by Shell Foundation and Deloitte, produced a set of what I believe are not even realized IRRs. So this is because the whole industry is still pretty nascent. Very few exits have been realized. A lot of this is based on unrealized exit data, right? So it's based on like, what are the fund managers holding the NAVs at? And what you can see is that essentially the gross and the net IRRs are not particularly high. They're certainly not risk adjusted. So I think this is, you know, I think this is really interesting. I think a lot more research needs to be done around this. A lot more data needs to be shared. But it does paint a picture, which is that it is difficult to yield high IRR returns in relatively early stage investing on the continent. So this is my last slide, and I'm just going to wrap it up shortly. Sayuri really reflect on where I feel the industry come from over the last 10 years, and then think about where I see it going over the next 5 to 10 years. And I suppose what I've jotted down here is a couple of trends I would say I've seen over the last little while. And so I'd say that there's, as the data showed, there's been a real proliferation of investing on the continent. It's been driven primarily by a large number of smaller fund managers. You know, the kind of sub 50 million funds. There is a lot out there doing a lot of you know, small ticket sizes. But as I noted on that last slide, you know, I think there's a real question mark over fund economics. And I think people have been very much focused on deploying capital because it's a relatively early and nascent industry, but really realizing exits. So there's a lot of funds with a large balance sheet, but limited liquidity reaching year 10, year 11, year 12, and it's creating all sorts of problems for a lot of the LPs because there is not an imminent path to exits, and it's really punishing IRRs. So I think that that's, you know, some of the trends we're seeing from an asset perspective. I think also, and this is specific, I would say, really to the 3 hubs I mentioned, Nairobi, Lagos, Cape Town, Joburg. There has been a real emphasis over the last, particularly 5 years, on a real VC model in Africa. So very much kind of replicating what we've seen in Silicon Valley on the continent. And there have been a lot of really high valuations and a lot of companies growing very fast. But we've also seen a lot of, in the last particularly 2 to 3 years, high profile falls from grace, if I can put it that way. A number of very heavily capitalized, very high valuation companies go to zero. And so what I would say is that I think there is a real shift in tide happening right now. And COVID is part of it as well. I think, you know, people are becoming more risk averse. People are looking at the underlying economics of funds. And you've had a couple of high profile assets pretty much go to zero. And people are beginning to rethink, is the Silicon Valley VC model really fit for purpose for the continent? And the point I just wanted to note here is, I think there's been a really interesting evolution in terms of how one thinks about impact. I think it started off quite simplistically as kind of more ESG. It then kind of evolved into thinking more about impact, like direct impact, like numbers of beneficiaries, etc. And I think what we've seen really in the last 2 years has been a huge emphasis on gender. I think that's been a global trend, but I've really seen that coming through in impact investing, but also just VC investing generally. The IFC, for example, published a really interesting report, you know, and that was focused on global VC, talking to, you know, the gender representation and GPs, LPs, etc. So that's certainly picked up momentum in the last little while. So just quickly, and I'm sure we'll have time to come back to some of these. Looking forward, I think the trend has begun looking around innovation around fund structures. You know, there's a lot of talk of blended capital. There is a start of LPs beginning to look at permanent capital vehicles. I still don't think we're there, but I think we're going to need a lot more innovation to come, because basically, you know, a sub $50 million fund is not viable on the continent. But we need people still to be able to do the smaller ticket sizes. And unlike in Silicon Valley, we're not getting the 10x, the 100x to carry the overall portfolio. And there are very good kind of structural reasons why that is the case. So I think that's a big area that is really going to need some innovation around in the years to come. I think people are going to have to start looking at exits. I mean, just the AFCA report I shared, they had no mention on exits. It's kind of symptomatic of the fact that we're still in the really early stages of the industry, not really thinking about exits. So I think there's going to be a big focus there. I think restructure funds, I don't want to be too pessimistic here, but I actually think it offers a huge opportunity. And I have begun to see some very interesting fund decks across my desk of people wanting to launch restructure funds on the continent, essentially pick up all the non-performing assets from all these closed-ended funds that are reaching year 10, 11, 12 and can't exit. I also think a lot more focus on self-liquidating instruments, debt, mezzanine. To give you, a piece of like data, debt funds are outperforming equity funds on the continent. All the data shows that. Our small set of data with our 12 funds, which are roughly 6 debt funds, 6 equity funds, shows that. But all the data being published by the big DFIs are showing that debt funds are outperforming equities. So, and they're self-liquidating. So, that's in part also why AHL is really beginning to rethink our early stage equity investing strategy and think more about, can we develop some more mezz structures and debt financing products that are still fit for purpose in the early stage segment of the market. Last 2 points really, business models, as I noted, I think people are beginning to rethink the kind of growth at all costs type business models. Is that a viable growth strategy in a market that is so fragile and where there are just so many exogenous risks to manage for? Discipline around valuations, that kind of goes hand in hand. And I think we're going to see some really interesting market adjustments taking place in the next, it's already happening in light of COVID, but I think it was coming anyway. So I think it's just been accelerated with COVID. And then finally, I think on the kind of impact investing aspect of it, diversity is becoming a really essential topic, and it talks to diversity at the GP level, diversity in terms of the underlying profile of the entrepreneurs being backed. That's going to be absolutely critical, and I think we're also going to start seeing continued evolution around how people think about impact. And that will be, particularly the way at least AHL defines it is that we don't price risk adjusted. We essentially price the delta between the risk and the pricing is our impact. And I think we're going to start seeing a lot more kind of scientific approach to trying to quantify that. I think that we'll see that, and then also certain kind of structures that are being developed when you look at impact bonds and the like, but trying to look at more kind of carry structures that are being tied back as well as the commercial returns. And then finally, just greater market segmentation. As I said right at the start, we've got, I suppose, what is a little bit confusing within the African context. You've got a real range of players in the market. And as I said, ODA is actually shifting to FDI, foreign direct investment. So even your NGOs now are thinking, geez, we need to raise our own impact fund. This is the new thing to do. But of course, they're coming at it with a very specific lens. And then you've got the BlackRocks, etc., coming down market doing impact funds. And so I think there's going to have to be a lot more classification to really be clear, like what is the degree of impact being achieved and the degree of return being achieved across that spectrum. There we go. I've lots of food for thought, Sayuri.
Yeah, Roseanne, that was a lot of territory to cover, and thanks for giving us such a thorough view of what the VC landscape in Africa is like. I am going to ask the first question, and Vera and I will rotate and hopefully get to most of your questions in the next 35 minutes or so. So the first question is from Tom Akoki. I am gonna probably mispronounce all the names, but so forgive me. But could you please comment on the recent disquiet in the entrepreneurship ecosystems that most funding is only going to expats rather than local entrepreneurs?
Yeah, I mean, it's a really good and valid question. And to be honest, it's something that, AHL, we're culprits of as well. I would say that probably still about 70% of our portfolio has been focused on expat founded businesses. And I would say that actually ties exactly to the point I made, which is that the last 5 to 8 years have really been focused on this kind of VC model in Africa. And so there's been a real focus on high growth businesses. And often it's a business from overseas. And VC is really difficult, right? You're making an investment decision off very limited data. And so what tends to happen, as you might have picked up on one of the slides, I talked about the source of capital. Only 15% of all that foreign direct investment I talked about is coming from Africa. And that 15% is South Africa, Nigeria, and Egypt. So broadly speaking, the capital is foreign. The GPs are usually foreign-led, myself included. And so what you have is a pursuit of a business model, the investing business model that has historically been very much like replicating, I would say Western VC models, which has thus steered people towards, that kind of ultra high growth business model. It's also been a business model of, I back the entrepreneur. Ultimately, there is not much in the way of data points. I get sold this really exciting vision. I get sold this really exciting growth story. And that is, the underlying basis upon which I'm going to be making my investment. And I think that it's particularly those two kind of drivers that have led historically for a lot of capital to end up going into more expert-founded businesses. You know, I think that this is thus a real challenge, and I think it's actually fair that this be called out. You know, one could go so far as to say, you know, it's a kind of new form of neocolonialism, right? Like, I've heard that claimed. You know, maybe that is a legitimate argument to be made. So I think, at least from an AHL perspective, you know, we've been doing a lot of thinking about this. A big part of why we took the strong decision to localize was to make sure that, you know, everyone who's working at AHL is really committed to the long term, to the continent, understands the continent. For example, I'm marrying a South African Zimbabwean. I've been on the continent for 8 years now and plan to build my, you know, career on the continent. I think that helps. I'll be honest though, it's still tough. Like, as a key decision maker on opportunities, you know, I naturally gravitate to what I'm familiar with. If someone's, you know, been to a top school and it's something I kind of connect with and understand, it just helps give me that extra degree of assurity when I'm essentially taking a pretty high risk position in a very unproven business. And so it's, you know, it's really for that reason that we're making sure that I've got senior local team members who can do that soft side of VC, early stage investing, but B, debt. I actually think debt is a really interesting product because I think it opens up more options for backing more kind of local entrepreneurs who may not be comfortable or even like kind of culturally aligned with bringing on equity into their business, but need financing and kind of better understand debt, and actually, as I noted, can potentially yield us a better return on debt. So that's kind of one of the reasons we're looking at that as well.
Thank you, Roseanne. Vera, you want to take the next question?
Of course. So Gaurav is asking, the African continent is struggling with lack of education, lack of electricity, lack of doctors, but major funding is going to e-commerce. Could you please comment on why that is?
Yeah, I mean, it's a really good question. I mean, I think there's a number of reasons. I think e-commerce is offering a huge investment return potential. Like, Twiga is basically an e-commerce platform for all intents and purposes. It just raised 20 million from Goldman Sachs. That will be by far our best return within our portfolio, right? On the flip side, we're also doing micro pensions in Ghana. I will be surprised if we ever be able to return off that. So I would say from an investor perspective, you know, we've taken the view that there's a degree of pragmatism here. Like, we need a few winners, and if they're not as impact aligned, well, then we're just going to have to do that because it shores up our ability to do some of the more impact first type deals. So I just say, in summary, like in response to that, I think you really have to look at whose capital is going where. You know, I do think the DFIs are still trying to allocate the bulk of capital to energy access, agriculture, health, education. But I think it's when you start looking at the slightly more commercial VCs coming in, you know, to be honest, that they're not too concerned about that. They're really looking at which of the high growth, high scale business models out there, and e-commerce is, you know, is a very attractive play on the continent with growing populations.
Oh, thank you. And then Roseanne, just a comment, your screen is still being shared. Is that deliberate?
Oh, no, thanks. Great.
Okay. So next question is from Anand. Question for Roseanne. How has the changing political climate in Africa changed the investment environment? And how are the governments of different countries in Africa supporting the investment environment in terms of policy?
Yeah, a good question. Difficult to answer in terms of, obviously, the region is so diverse. Interestingly, when I was reading the Africa report, they were talking to the greater kind of regulatory environment, enabling environment. two markets that we're actually not active in, but apparently Senegal and Egypt have brought in a lot of legislation to particularly support and promote SMEs and entrepreneurship. You know, it's an interesting question. I mean, I would say that broadly speaking, we're still pretty peripheral as a kind of sector, if I can call it that, to kind of key considerations from government. And we're not particularly politically important. You know, things around manufacturing, education, agriculture are highly politicized sectors. And that's really what captures a lot of discussions and you know, interactions with government. I mean, I think if I specifically look at East Africa, you know, we unfortunately took a decision 2 years ago to no longer do any more investing in Tanzania because Magufuli has been very detrimental to the business environment. I can give very specific examples of pretty outrageous things that we've seen happen. We've had two businesses which are within some of our fund investments close as a result of government interference and interference from the Tanzanian revenue authorities. So we've had to take a decision to pull out of that market altogether. Ethiopia, as some of you may be aware, has seen quite a lot of civil unrest in the last few months, and it's just resurged over the last 2 weeks. So similarly, that is a market that right now is really not, from a political stability perspective, very attractive, but it's also notoriously conservative, and things like foreign exchange controls make it very difficult to invest directly into Ethiopia. I would say markets like Kenya, Rwanda, to a lesser extent Uganda, have been relatively benign. Like, it's not as though the government or regulation is particularly enabling to what we're trying to do, but it's not actively kind of destructive, if I can put it that way. So it's a tricky one. I think it's something that we think about and track very carefully, and it's something that we find in the end really impacts our returns. Like, we're seeing that in Zambia. We've got a high exposure of investments to Zambia. Kwacha has gone from 10 to 1 to nearly 20 to 1 in kind of 18 months. Essentially, all of our assets are underwater. Even if they keep growing in dollar terms, it's going to be really difficult to yield a decent return from these assets. So yeah, it's a tricky one and something we look at very carefully.
Okay. Maybe a related question coming from John Berger. Regarding your comment on fund sizes potentially being too small to be viable, I've started to see in the US small funds addressing this by being linked to Accelerator, a nonprofit or other company that has overlapping mission and can eat some of the overhead expenses. Are you seeing anything like that?
Yeah, I really like that question. And you're absolutely spot on. I think we're seeing a lot of that. We're seeing a lot of accelerators, small funds, to do follow-on, you know, small investments, as well as, you know, coming out of maybe more NGOs. My, if I can say, just concern is just around exits and liquidity and time to exit. I think on the really early stage, that all works for the first few years, whilst you've got a team who wants to do deals, energized, excited, writing loads of checks. Who's going to be there in year 10 managing a $100,000 investment in a company that's really struggled to scale? It's going to be really difficult. Your like management time and costs associated with like managing such a small investment like that becomes really difficult. Even just retaining the talent to manage that is really difficult, because it's hard. It's pretty dry work, slogging away with a minority position and an assets that's not really necessarily growing. So this is why I say I think there's going to be a lot of focus on kind of restructure and turnaround funds. So a vehicle set up with a specialism to, in a way, kind of come in and kind of collect up all of these legacy assets that, you know, these organizations have just got to a point that they're no longer able to continue supporting. And so rather than writing them off, which I think in the long term could be quite you know, destructive to the ecosystem, they could be absorbed into these kind of restructured turnaround funds, and then they're either actively exited in a responsible way, or they're actively kind of managed and given value creation support to really try and get them onto a new trajectory.
Thank you. So this question is from James, social impact entrepreneur from Nairobi. I guess he's from Nairobi. His question is, we leverage innovation and technology to improve smallholder farmers' income substantially. Does your fund invest in primary agriculture startups?
Yeah, good question. I spent 7 years investing in primary ag in Africa. I did 22 investments in Mozambique in commercial farming ventures. Primary production has traditionally been something, whilst at AHL we've tried to kind of steer clear of, just because of A, the risk profile of it, but B, also the technical know-how. In my previous role at AgDevCo, we had a whole in-house agri team that you could leverage into deals. But having said that, we are in a poultry business called Ethio Chicken, and we have a loan to Victory Farms, which is a tilapia, a vertically integrated production business. So it is something we are increasingly doing a bit more of, but you know, we'd really have to understand the business model. Smallholder agri production is tricky. I've been involved in lots of different business models doing that type of thing, and it is tricky. But yeah, happy to take a look.
And then the next question is one on gender equality in VC. So Kat Liho asks, access to capital is particularly challenging for female entrepreneurs, with the African Development Bank highlighting that there is a financing gap of $42 billion between male and female entrepreneurs across Africa. One contributing factor is the misalignment between the demand and supply side of funding. What role do you believe VCs can play in starting to address this problem? And how do we get more impact investments into women-led impact ventures?
Yeah, it's a great question, and I think something that the market is generally thinking a lot more about. I mean, we 2 years ago begun to really think very holistically about the role of gender in our organization. So the first thing we did is we shone a light on AHL. And actually, it was before I took over as CEO, but at the time I had super engaged and kind of a leadership team who was really supportive of making sure that us as a GP were also balanced. Obviously, taking over the leadership of AHL in January, it just so happens that I am a woman, and you know, of course, like, we now have a very balanced team. Just over 50% of our investment team are African women. So I think that's one thing. I think you do need to have a balanced GP, a diverse GP, if they're going to do a diverse, balanced set of investments. So I think that's number one. You know, I think number two, there's a lot of interesting things happening. I'm seeing, particularly in Kenya, quite a few gender, so female-only accelerator programs to try and call out some aspects that are very specific to women. For example, it could be like, you know, how do you manage the balance between work, building a business, and childcare, having kids, and the rest. Other things that we often see is around style. I mean, I think this is something for VCs to think about, but I also think it's an area where women, you know, tend to not be as confident presenting and pitching. That's often something that we will see, and it's something that we at AHL, like, I mentor a number of women. I often volunteer to speak in like these women network groups to kind of familiarize them how to think about this, etc. I'd also say it's training and language. I didn't even come from a finance background. I remember my first 6 months. I was really lucky to get into this brand new kind of VC. As I said, I was second employee. I was working for the former chairman of Rothschild Investment Bank. I didn't have a clue. And I just didn't know all these financial terms. And within 6 months, I was like, oh my goodness, everyone's been just using all these terms, which are really not that complicated. But it's just a language. And so I often say, another thing is, women entrepreneurs, I think this is where accelerators can play a role, can really learn the language, which just helps build the confidence and obviously helps investors get confident in them. But I do think that there is, we're still we're doing a lot of these pitches, right? Especially in Nairobi, Lagos, Cape Town, etc. Again, that's a very kind of VC male-dominated type approach to pipeline selection, and I think there's some innovation there that we could also do from a VC perspective.
Yeah, and maybe a follow-on question. So you said that to get more equitable investments in women founders, you need that same balance on the GP level. Do you see that? And you said that you also do fund investments. So do you see it on that side as well?
Yeah. So I'd maybe say two things. We're not really doing many fund investments anymore, in that we've built up all of our direct capabilities. I think we'll use our fund investments in the future just to be really strategic, maybe to think about where we want to move into a new market, for example, do an investment in a fund first and then use that as a way to learn and then maybe co-invest with that fund manager. What I am, however, seeing is the likes, CDC actually literally just released a paper today, I believe, calling out specifically that now when they screen funds from an investment perspective, they're going to be looking very closely at gender diversity as well as kind of local versus expat diversity. So I think the tide is shifting, and I think it will be increasingly difficult, especially for first-time fund managers. Maybe not your African Vests, your Carlyles, etc., who are extremely well established, but certainly for your first-time fund managers, I think it will be very difficult to raise substantial amounts of capital, especially from DFIs, if the GP isn't reasonably well diversified.
Okay, the next question is from Tom. The SME returns seems low. What if we consider that innovation, which is technology-driven enterprises instead? Would those returns be better?
Yeah, it's a good question. I suspect so. I suspect look, and this is the problem, right? With aggregated data, it masks a lot of the nuance and detail. Like, for sure, there are select, impact investors, VCs out there who are being very selective in the types of deals that they're doing, that are yielding good results. But I can tell you that I know someone very well, very high up in one of the biggest DFI with the largest fund exposure in Africa. And at the moment, their earlier stage equity and debt fund portfolios are sitting at a multiple invested capital of 0.86. So, technology would have to really have a big impact to shift the needle across the whole average portfolio. But I do think that there are very specialized firms out there who are clearly yielding good results. But I think that will be in, for example, SaaS type business models, purely kind of e-commerce, consumer financing, these types of products.
Okay, and then we get a more controversial question coming from Gary Brooks. I have been doing business in West Africa for over 10 years. How are you able to deal with the extraordinary level of fraud and corruption in many of the countries?
Yeah, I mean, it's tricky. I mean, I should say that I actually, unfortunately, I don't have any direct personal experience in West Africa. I've pretty much spent most of my time in Southern Africa, including Mozambique, which, to be fair, is a pretty tough market. 6 years doing deals there. Look, it's tough, and I would just say it's about, you know, perseverance. That's one thing, because, you know, to some extent, you know, whomever lasts longer wins. And I, you know, it's silly to say, but it's the classic: you get pulled over by the police, and if you're willing to wait it out, sooner or later they'll probably let. So I would say it's tough. Look, it's really tough, and it's tough when it interplays, rightly so, with all of the KYC, AML, and, you know, all these kind of general international standards that, of course, our LPs want us to be adhering to, rightly so. So it is very difficult. You know, in one of my previous roles, you know, every 6 months, every single member of staff in the organisation would have to do certified, you know, disclaimers stating that they were not aware of, they had not participated in any type of, you know, corruption of sorts. It doesn't really change the reality there of how challenging it can be to operate in these markets. And I hate to say, I think at some point, sometimes you just have to take a degree of pragmatism.
All right, thanks for that. I guess time is running out fairly quickly. So we're gonna take 2 more questions, but I would invite folks with questions that have not been answered to join our community platform. And if you pose your question there, we can ask Roseanne to try and answer them for you, so you can find them there. But let's conclude with 2 more questions. So this one's from Bill. Is there a growing amount of merger and acquisition activity in Nairobi in general, perhaps not only in VC?
Yeah, I really like that question. There is some. We've seen 2 pretty high-profile M&A transactions through in the financial inclusion fintech space, which I think is really encouraging for the whole sector at large. It shows that there is a path to some exits, and I believe it wasn't publicly available, the acquisition prices, but I believe that they were pretty good acquisitions. So it's beginning. It's not anything like as mature as it is in other markets, but it's certainly beginning. And I think the other thing I'd say is that we're beginning to see a lot more interest from strategics, and that's also really exciting, because we're seeing a lot of strategics coming in, actually even to seed, you know, Series A type investing. In our portfolio alone, for example, in PowerGen, which is a distributed mini grid company, Shell invested, as well as Sumitomo, which is a large Japanese conglomerate. Similarly, Copa, a large investment from a strategic. So I think it's slowly coming, and I think it's definitely trending in the right direction. So it's generally very encouraging.
So Roseanne, how do the strategics get involved? Do they get introduced to these startups through VCs, or I mean, how do they even find these small companies?
Yeah, what we're seeing is that a lot of these global strategics are taking the view of actually hiring their own venture team in-house. And then often, if they've got a priority market like East Africa, for example, will hire someone on the ground in Kenya. You know, for example, Toyota's done that, DSM's done that, who we invested with in Zambia. We did an investment with a large Irish strategic. They have direct hires on the ground. So I'd actually, for those who are pretty proactively interested, they've either got an in-house venturing team, or they're at least hiring people who are regularly on the continent or based on the continent. But for example, we got connected to some of these VCs actually through strategics through financial advisors. But now we've got those relationships. What's exciting is we're exploring future co-investments, knowing how each other works. And actually, they really like investing with a local investor who really understands the lay of the land. They may come with a lot of specific content sectoral know-how, but often they really don't necessarily know fully how to operate in these markets, and certainly all the kind of financial structuring, capital raising, etc. considerations.
Okay, well, and I think I have our last question coming from Bettina. I'm really interested in African innovation. Are there any partnerships formed with local universities, African incubators, and/or any other innovation-focused entities? Do you see such organizations play more of a role in African VC in the future?
Yeah, it's a great question, and there are a lot that I'm actually seeing. I'll be honest, it's just a little bit early for us, so I haven't been paying that close attention to it from a kind of pipeline deal regime perspective for us. But we're seeing for sure quite a lot of academic institutions trying to create these partnerships with accelerators. For example, I think that there's a UK Engineering Institute program that's done annually. Strathmore University in Kenya does a lot around innovation and to incubate new innovations and ideas coming through the university. So I think it's really interesting, and I definitely think that we're going to see more of that in the future.
That's super good to hear.
So thank you, Roseanne. This has been great, and we still have more questions, but unfortunately we don't have time for it. And hopefully COVID is going to be over and I get to visit Nairobi again and see you in person, Roseanne. And this is
absolutely.
almost
well, thank you so much for inviting me.
I'm sorry?
No, thank you so much for inviting me to speak.
Yeah, and everyone, it's really late in Nairobi, and it was so kind of Roseanne to join us today. And hopefully we'll see some of the audience again in our next webinar and other programs that we're putting together. Again, thank you, Roseanne, and bye-bye to you.
Bye.
Thank you, Roseanne.
Thanks so much. Bye.
Thanks for joining us. And for more information on how to connect with the MIT Alumni Association, please visit our website.